What is going on, my good old friends of YouTube? It is your boy Stas here. Welcome back to another video. So check it out. This week we have a lot of earnings. Walmart, Home Depot, Target, Lowe's, Take-Two. We have a lot to talk about in this video. 10 companies. And if you guys stick till the end, we're going to go over some bonus ones as well. And of course, we got to break down what the markets have been doing as of late and kind of what I'm looking to do this week, my game plan. So sit back, relax, take a sip of your coffee, and get your free money from Moomoo. Up to 5 free shares of stock, each up to $3,500. All you got to do is use that link, deposit at least $100, link down below. And if you want a free share of Twitter as well, deposit at least $2,000, and you get a free share of Twitter and up to 5 stocks, each up to $3,500. Free money, guys. Again, link down below. And with that being said, cheers. Let's get into it. Starting off with what the heck has been going on in these markets. So you guys know last week we had a bit of volatility, right? What else is new? Every freaking day last week, one day it was, swinging heavily in the red. The next day we were up in the pre-market, but then all of a sudden it dumped deeper into the red, right? So last week was very volatile, and we ended off the week on a very strong green note. Look at this. We hit 385 when it comes to SPY on Thursday, and we ended up closing over 400. So SPY ended up moving up 4.5% from Thursday's lows to the close of Friday, and Triple Q ended up moving, let's see here, from 284 to about 303, which I believe last I checked that was a 6%. Just a little bit over a 6% move. So we ended up closing up very nicely on Friday. Pretty much all of the stocks on my watch list, a lot of stocks out there on Friday, ended up doing very well. And now we are at a very crucial spot. Like I've been saying a lot on my channel, guys, we are now at the 180 moving average resistance here on Triple Q on the 20-day chart. And it's the same thing for SPY. Let me pull up SPY. Take a look. We are at a big resistance right under that 180 SMA on the 20-day chart. So at this point, I have an alert set at 405, 415, 430 on SPY. 3 alerts. Obviously, the closest one being 405. If we do take out 405, which was a big resistance last week, and also, again, that 180 SMA resistance on SPY here, if we take that point out, this rally from Friday could continue, in my opinion. That's what I'm thinking in the short term. We break 405, we might be going 410, 415. That is what I'm seeing here on this chart. And for Triple Q, let's pull that up. Triple Q, let's say if this breaks above 305, which was a big resistance last week, also the 180 SMA, this could end up going 310, and if 310 breaks, this could end up flying even more aggressively towards 330. Now, I don't want to get ahead of myself because we haven't yet broken, but we are going to set alerts and kind of watch out and see how the markets look in the morning. And of course, heading into tomorrow afternoon, Tuesday, Wednesday. And right now, one good thing about me filming this video past 7 p.m. on the East Coast, guys, the futures are open. In fact, they open at 6 p.m. on the East Coast. And right now, the futures are looking pretty green. Pretty green, guys. Look at this. We have the ES, the E-mini S&P futures. These are up right now about 0.3%. Nothing crazy, but still, they are up, which we can't complain about that. We have the Dow futures. Let's pull these up. Dow futures are up, it looks like 0.25%. Not too bad. They're up about 80 points right now. And we have the NASDAQ up. Oh, look at that. 0.5%. Perfect. Look at that. Up 58 points. Well, not exactly 0.5%, 0.45, but pretty dang close, guys. Pretty dang close, as we have the Russell futures up about 0.3%. So green day on Friday. Now not pre-market. Geez, guys. Now, the futures market day before Monday, Sunday night, we are green. And no, guys, just because we are green right now, it doesn't mean that we're going to be green in the morning for sure. But hey, I guess it is a decent sign, and we will see if this carries into the morning, right? If we wake up and we're up 1% across the board on these indexes in the futures, in terms of the futures market, that would be fantastic. But we could also wake up and we could be heavily in the red. It's possible. So let's see how it goes. What do you guys think? Drop me a comment. Make sure to smash that like button if you haven't done so already. And if I sound congested, I'm still a little bit congested, guys, so I do apologize about that, but I am doing my best here to get through the video, so cheers to that. Let me actually, and by the way, this is my first coffee of the day. I mean, I don't even know why I waited till 7, but hey, cheers. Either way, guys, let's get a sip of that. Alrighty, now let's talk about what we have for this week in terms of earnings. We have a lot of companies, retail, mostly focused on retail reporting. So we're going to break down 10 stocks, not too in depth, but we are going to go over EPS estimates, revenue estimates, all that good stuff to kind of see what analysts are thinking right now about these stocks. So number one, we have Walmart, ticker symbol WMT. Walmart is reporting on the 17th, which is not on Monday, tomorrow, or, well, if you're watching this on Monday, it's not today, it's on Tuesday, right? It's on Tuesday, the day after Monday, if you guys didn't know. Earnings on the 17th, and what we're noticing here on Walmart, it's down about $13 in the past couple of, days, right? What is this, about more like a couple of weeks. It's down about 8%, $13, nothing crazy. So I'm kind of watching this heading into earnings to see if if they report decent numbers, does this stock get bid up? Do we get buyers to maybe start pushing it back towards that $150 range and maybe above that, as that would be right above the moving averages on the 4-hour chart? And if we are indeed in a recession right now, you guys know Walmart is one of those companies that, in my opinion, and honestly, it's probably a fact at this point, but it's pretty much recession proof. It's going to do well in a recession, not in a recession. It's going to do pretty well. Unlike Target, which might have a little bit more difficulty during a recession. We'll talk about that here in a couple of minutes. In my opinion, Walmart, I mean, it's everybody. Everybody shops there for necessities, whether it's cheap socks, clothes, food, this, that, the third. You want a bike, you want a TV, you want a Christmas tree, you go to Walmart. Literally, they have everything. So they are projected to do EPS of $1.47 with average revenue looking to be about $139 billion. And I actually pulled all of these numbers from Yahoo Finance. No, they're not sponsoring my video, this video, or any videos I make. I just genuinely use Yahoo Finance, and I've been using them for a long time, many, many, many years. So this is based on, all these estimates that we're going to talk about in this video. They're based upon 15, 20, 25 analysts, depending on, what company we're talking about. So keep that in mind. So Walmart, I think they're going to do well. We have to see what they do. So I'm going to set my alert at $150. And remember, if we're actually in a recession, which we'll see when the next, quarter GDP data comes out, if we're in a recession, guys, and we go into a deeper bear market, Walmart, I think, is going to do well. I think it's going to outperform. And am I saying it's going to go up? Not necessarily, but think about it, guys. People can outperform in a bear market even if they're losing money. Because let's say, for example, the S&P goes down 30% and maybe Walmart only goes down 15%. I mean, yes, you lost money in both scenarios, but you lost more money holding the S&P, right? So I think Walmart could do very well. We'll see how it goes down. Even if we're not in a recession, guys, over these next couple of months, next couple of quarters, I think Walmart is going to do well either way. So that's number one, stock number one. Watch out for it. Number two, we have Home Depot. Home Depot is another great company to look at and kind of gauge and see where the economy is at. And judging on the stock, well, the stock has not been doing well. The economy is, not doing well either. Kind of makes sense. Obviously, I'm joking a little bit, guys. I mean, there's not a 100% correlation there, but that's what people say sometimes, right? Home Depot, you look at how the company's doing, and you get a gauge on the economy. But overall, Home Depot's down 30% from all-time highs, which it's deep in a bear market, and they're reporting on the same day as Walmart. And I think these are pre-market. I could be wrong on that. Home Depot's pre-market. Walmart is probably pre-market as well. Let's see here. It's pre-market. So Home Depot, Walmart, pre-market. And when it comes to Home Depot's EPS estimate, guys, it is let's see here. An average EPS estimate of $3.67 with average revenue estimate of $36.664 billion. So Not bad, not bad. I don't have the year-over-year growth numbers for a lot of these companies, but we do have them for some of them. So I'm curious to see if they're probably not growing much year-over-year, considering Lowe's, which we'll talk about here in a second. I do have the year-over-year number on them. They're actually going to be declining in revenue most likely year-over-year. So Home Depot, I have two alerts set, 320, 375. Obviously, we're way under 375, but we're not too far off of 320. We're at 296 right now, and mind you, Home Depot on Friday went up over 2%. So if we start breaking out of these moving averages, 310, 320, that is where Home Depot could start gaining some steam. So I'm watching that. Target, let's talk a little bit about Target, right? I think this company, it's going to make it through a recession, no doubt. I mean, there's no way in heck, I could be wrong though, nobody really knows, but there's no way Target goes out of business. But when it comes to a recession, think about it. More people shop at Walmart. Walmart has, the middle class, kind of lower class demographic, and they get all their essentials there. Like I said a couple of minutes ago, in Target, you kind of go with extra money. It's a little bit more expensive. It's kind of more, what's the demographic, would you say, guys, for Target? Middle class to upper? I don't know. I mean, I guess everybody goes to Target, but you kind of know what I mean, right? You go to Walmart more for necessities, and Target's kind of more if you have, extra income, disposable income, and you want to just go and blow things, right? Blow your money. I'm sure a lot of you guys, if you have wives out there, girlfriends, fiancés, whatever, Target, it's one of those spots that they go crazy at those spots, right, guys? So, they're looking to do average EPS of $3.05. Average revenue estimate is $24.42 billion, and they report earnings on the 18th, which I believe is on, what is that, Wednesday? Let's see, is that on in the pre-market? Yes, it is, guys. It's in the pre-market. So look at what we're seeing in terms of this chart, or at least what I'm seeing here. Let me know what you guys think in the comments. Make sure to smash that like button and get your money from Moomoo and Webull. Link down below, up to 10 stocks. Free money, guys. Get your money right now. Look at this. What we're noticing is we are towards the bottom of an uptrending channel, and we're under both moving averages. And we might get a death cross depending on what these earnings are looking like. If they drop the ball, guidance is not strong, and let's say they're not even providing guidance, which that's a red flag as well. Target might break out of this channel or break under this channel, which would not be good. But as long as this holds 220, 225, and it starts breaking 230 potentially, which is where I'm going to put my alert, there could be a move coming maybe towards 250, 260 if they smash earnings out of the park, guidance is strong, and so forth. So it's a waiting game for me, guys, for all of these stocks, quite frankly, because I'm not the type of trader that likes to buy short-term calls right before earnings or short-term puts or load up on a bunch of shares and gamble. I'm not going to do that with these stocks. So I'm going to wait till after they report, even if it means I miss the move. Whatever. Who gives a crap? I rather be more conservative in this market that we're in right now. That's just me personally. So let's watch out for Target. And now let's talk about Lowe's. Remember with Home Depot, I said I don't have the year-over-year revenue number. But for Lowe's, if they end up doing revenue of $23.76 billion, which is the average estimate on Yahoo Finance, that would be a decline of 0.4% year over year. It's not crazy. It's not 40%. It's not 20%, 5%. It's 0.4% if that average revenue estimate of $23.76 billion hits. And at the end of the day, it's a decline. It's a decline year over year. And that's where we are right now, guys. A lot of these massive companies, large cap companies, whether it's retail, big tech, whatever. Well, maybe we'll make a video on the big tech stocks, but a lot of these big companies, some of them, not a lot of them, but some of them are at the point where they grew very heavily in 2020, 2021, that they're not growing, that revenue year over year compared to those numbers. Now, does that mean it's going to decline forever? No, but we might see a year or two where revenue comes down a little bit, maybe even more than that if we get into a deep recession, who knows? And then we might get that rebound. I mean, eventually I think we will get that rebound in companies like Lowe's and Home Depot because they are very quality companies. I could put, quite honestly, guys, I could put money into these stocks. I don't own these stocks personally, none of these, to be honest. But I could put money into Lowe's, Home Depot, Target, Walmart. Go away, come back in 10 years, and I'd feel confident that I'd have more money, dividends reinvested, compounded growth, all that good stuff. These are very quality companies at the end of the day, but we're just nitpicking numbers right now. I mean, we're having fun. They're not going to be growing year over year. Is it the end of the world? No, it's not. But in the short term, they are struggling. They're contracting a little bit. That is what we're seeing. The next stock that I'm looking at is Take-Two, to shift gears a little bit from retail to now video games. Take-Two is down a lot. This stock went down from $195. Is that the all-time high? Let me double check, guys. Maybe not. Yeah, it's not. $214 is the all-time high. Was the all-time high from when was that? Beginning of 2021. So about a year and a half ago is when we hit that all-time high. And now Take-Two is down probably 40-50%. Yeah, 50% from that all-time high, and I just spit on the mic a little bit, guys. You probably didn't see that, but I just told you anyway. And on Friday, it looks like it did have a little bit of a bounce back, 3.5%, not too bad. But overall, again, it's down 50%, which is just horrific over the past couple of months. And a lot of these video game stocks have been underperforming. I mean, let's be honest here. We have Take-Two, which is down, like I said, 50%. We have EA, which EA's not down nearly as much. It's only down about 17%, and it looks like it did bounce back. So if EA, or rather if Take-Two's earnings are anything similar to EA's, which EA did well, maybe we get a pop in Take-Two. But overall, these video game stocks have not been doing the best, and it looks like Take-Two's been the worst one, at least out of the ones that I track. Take-Two, EA, Activision Blizzard, and we all know what's going on with Activision Blizzard, guys. So Take-Two is reporting on the 16th, which is tomorrow on Monday, or if you're watching this on Monday, it's today after the bell. So keep your eyes on those earnings, guys. They're looking to do EPS of $1.04 with average revenue at the estimate is around $882 million, which would be up 12.4% year over year. Not too bad. So they're still growing over 10% year over year. And I'm assuming last year and the year before, their revenues were solid. So, 12.4%, not too bad for growth there. So I'm going to put my alert at $120. We're at 109 right now. Let's see what happens. Mark is at or above $120. And the next stock I want to talk about, guys, which also this company also reports earnings this week, it's ZIM Integrated Shipping Services, which I've talked a lot about this. Well, not a lot about this company, but I warned you guys a couple of months ago about it. And quite frankly, to be honest with you all, since that warning video, this stock's gone up even more, 30-40%, but I'm still sticking to my guns and what I said in that video, that this is a short-term, this stock is doing well in the short term. And a couple of years from now, will this company continue, the performance we're seeing right now? Absolutely not, in my opinion. I think this is just benefiting from a lot of short-term things right now. We're not going to get too deep into that in this video, and they're paying a massive dividend, which whenever I see a dividend yield, guys, over 10%, let alone 20%, this dividend yield, I think last I checked, it was 20%. It might be even more now. Let's see. Let me give me a second, guys. Let me tell you what it is. Hold on. ZIM, it's right now, the dividend yield is 30%. 30%. Well, that makes sense because, as the stock price comes down, the dividend yield gets higher. So when it was at $90, the dividend was probably like 15%, I don't know, or maybe 20. Either way, it's very high, and I think they're paying this because they're doing well in the very short term. If you guys look at their, financials, you see the big spike in revenue growth, and in the short term, it's likely to continue to do well. We have an inverse head and shoulders here. We're breaking out of these moving averages. This might start breaking out yet again. We have average revenue expected to be around $3.47 billion, which is up over 110% year over year. And the average EPS estimate is $12.53, and their earnings are coming out on the 18th. So I've said this before, guys. Again, I'm not trying to preach to you all. Do what you want. But for me, this is way too risky. 30% dividend yield. If I just see that on any stock, I'm turning around. I'm not putting money into that. There's For me, it's just too risky, too sketchy, right? You don't know what's going to happen with those companies, guys. So let's see what goes on with it. Let me know your thoughts in the comments. John Deere, we have John Deere, which is at the bottom of an uptrending channel right now on the 4-hour chart. They report earnings on the 20th. Average EPS estimate $6.71. Average revenue estimate $13.1 billion. So I'm going to set my alert at maybe $380 on John Deere. If it starts making a move towards that 50 SMA on this 180-day chart, there's going to be more upside in my opinion. So markets that were above $380 on John Deere. Another one I'm looking at is BJ's Wholesale Club. This one's in a wedge on the 4-hour chart. You guys can see it, higher lows and lower highs at the same time. We have BJ's reporting on the 19th, which is Thursday pre-market. John Deere's on the 20th, guys. Forgot to mention that. John Deere's on the 20th, which is on Friday. So for BJ's, I'm going to put an alert at about $64, maybe $64.50. Let's do that. $64.50 markets that were above. And if we start breaking out of there, guys, with earnings coming up, average EPS estimate 70 cents, average revenue estimate $4.19 billion. If we start breaking out of there, 70s, the top of the wedge, that is where this could be going. We also have Ross this week, Ross Stores. This one up 3.3% on Friday. It's trying to fight back over these moving averages, although we're still under both moving averages. Average EPS estimate for this company is $1, literally $1 flat. Average revenue estimate $4.53 billion. They report earnings on the 19th, which is on Thursday, probably pre-market. So actually no, aftermarket. So I'm going to set my alert at $95, right by the 180 SMA here. If we break out of there, we might be getting a move towards 100 plus, and maybe we start breaking out again, which this stock has not been breaking out at all. In fact, it's been downtrending for months at this point. So ROST, Ross Stores, keep your eyes on it. This is another company that I think will thrive in a recession. Discount clothes, shoes, whatever you want, guys. Literally, this is, well, not whatever you want, but if you're looking to shop for clothes, shoes, this, that, belts, little knickknacks, I mean, Ross has it. Home Goods, well, maybe not Home Goods. What's the other one? TJ Maxx. These are good. Marshalls, right? I think these companies will do well. So the next one here is Cisco. Cisco is reporting on the 18th, average EPS estimate of 86 cents. We have an average revenue estimate of $13.34 billion. And Cisco, guys, it's just been a bloodbath. I mean, this stock's down 22%. Well, actually, that's not that bad considering, it's actually almost beating the S&P. It's definitely beating the NASDAQ and the Russell. It's almost beating the S&P. It's not beating the Dow, but it's still down 22%. It's in a bear market. We have to watch and set alerts for this one. I'm probably going to put my alert at, let's say, maybe $55. It's at 50 or under 50 right now, but eventually, let's say we get good earnings, guidance, yada, 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 we break 55. This could start making a move 60 plus. Let's see how it ends up going down, guys. And with that being said, that's 10 stocks. Those are 10 stocks. We have 3 more, I guess, we can shout out for this week. We have TJ Maxx, TJX. We have, or not TJ Maxx. I don't think that's what it's called. They own TJ Maxx, but TJX is the parent company. Foot Locker, FL. We have Foot Locker this week, which has been destroyed lately. We have JD.com, Chinese company. Yes, Chinese company, guys. Oh my goodness. Why are you looking at Chinese company stocks? Because there could be a lot of upside, dang it. That's why I'm looking at Chinese companies. They might go to zero, but who knows? They might go to the moon. That's why I'm looking at the company. So, JD's reporting on the 17th. When's Baba reporting? That's one I want to watch. Let's see here. That's the 26th. So that's not this week. That's next week. So, that's it for this video, guys. If you enjoyed it, hit that like button, subscribe, drop me a comment, and make sure to join my Patreon if you want all my buy, sells, call-outs, morning videos, more access to me throughout the day. That's on Patreon, link down below. And make sure to get your free money from Moomoo, up to 5 free stocks, each up to $3,500. Just deposit at least $100, and if you deposit $2,000, you get a free share of Twitter, guaranteed, on top of the other 5 stocks. So use that link down below and get your 5 stocks from Webull, also linked down below. And with that being said, cheers, guys. I'll catch you all in the next video. I'm going to go edit this, upload it. I'll see you guys later. Peace out.